Greetings, everyone. This is RKrivo with our chart drill down for November 17th, 2015. Good to be back with you after doing a few weeks of traveling. And currently, on the four trades we have open, all of which are selling the euro, incidentally, we are up about 750 pips as of about maybe 30 minutes ago. And for specifics on the pairs, feel free to check my Twitter feed at RKrivoFX right down there, as you can see by the arrow, for updates on the trending pip counts as they are posted. Now, moving forward, if you have any questions about any of the indicators that I use on my charts or why they are set up the way they are, refer to the YouTube video dated May the 11th, and it's entitled Chart Tutorial. That'll give you a good explanation. And if you still have questions, email me at rkrivofx@gmail.com. Now, remember, these charting drill downs that I do are designed to identify the higher probability trading pairs. Any of these setups by no means should be taken as an indication that they will ultimately turn into a winning trade. As those of you who have followed me for a while, trading is all about probabilities, and what we do is identify a trading edge to provide us with a higher probability trading opportunity. And the more of those edges that we identify, the greater the likelihood that we're going to have a profitable trades, and that at the end of a week, at the end of the month, at the end of a quarter, or the end of the year, we will be in a profitable situation. All about probabilities, as I mentioned. Now, with that, let's quickly go over the disclaimers. Trading foreign exchange involves significant levels of risk, not suitable for all investors. You should only be trading with risk capital, and that is money that you can afford to lose. The high degree of leverage can work against you as well as for you, and the content provided herein is for informational and educational purposes only. Okay, now let's start to take a look at the charts here. And hang on one second while I bring the charts up. Now, as some of you may recall, I use a strong weak currency analysis to point me in the direction of the pairs that are in stronger trends. And should you want to know more about that, email me, rkrivofx@gmail.com, and put strong weak analysis in the subject line. I'll be happy to get back to you on that. Now, the most recent strong weak analysis, which I did again about maybe 30 minutes ago, indicated that the USD, the US dollar, was the strongest currency of the 28 that I monitor, and the euro was the weakest. So that is my first stop as I drill down the charts. I said 28, I mean 8 different currencies, 28 different pairs. So with that, once I know the euro is the weakest and the dollar is the strongest, guess where my first stop is on the charts? To see if I'm presented with a higher probability entry. So here are my charts, weekly, daily, 4-hour, 1-hour on the euro USD. And I start from the largest time frame and work my way down to the smallest time frame to look for that entry. And what I'm seeing on the weekly is we've got price action below the 200 period moving average. The pair has touched the upper Donchian channel on the weekly chart and taken out the lower Donchian channel, which means I'm in an open sell position on this pair on this chart. What I really like about this weekly chart is that slow stochastics is got a big angle and separation to the downside here, which indicates the potential that the pair is going to continue to move to the downside. Potential, again, not a guarantee. So with that, I'm looking at the daily chart, and I see the same thing here. Pair has touched the upper channel, taken out the lower channel, and continues to make lower highs and lower lows, which is the definition of a downtrend. That's what I'm looking for. And on the slow stochastics indicator, we're below 20, which indicates, again, a sell bias, and I'm in an open sell scenario using the Donchian channels on the daily chart. Go down to the 4-hour, similar type thing, below the 200 period moving average. Slow stochastics is below 20. Price action way back here a ways, taken out the upper channel, and then has taken out the lower channel and has continued to take out that lower channel all the way down. Okay, looking for an entry off the 4-hour or the 1-hour. What I'm looking for, those of you who understand the Donchian channels and may have worked with me on that in a mentoring situation, a one-on-one mentoring situation, understand that what I'm looking for here is I want to see price action retrace, ideally to the upper Donchian channel, perhaps to the 200 period moving average on this 1 hour chart. Uh, because it's been making higher highs and higher low, or excuse me, lower highs and lower lows. It's been a few weeks since I've done this. Sorry about that. It's been making lower highs and lower lows periodically here, continually going down. And what I'm looking for here is there's going to be a pullback. So I don't want to get in right now and then have the pair retrace against me. It may do that. It may not. It may continue to drop like a stone here and continue down, in which case I will lose out on the entry. I'd rather do that than get short at, let's say, 106.29 and then have the pair retrace a couple hundred pips. As far as what I'd be looking for on the trade, at this point, because that's one of the pairs we're short on right now, is let's see, we're at 106.44, and on that weekly chart, the first level of support is about 91 pips away. Yeah, if I go to the bottom of that wick, about 91 pips. If I go to that lower channel, the previous low on that weekly chart, I'm looking at about 183 pips. So the pair has room to move to the downside, but before I want to enter, I want to look for a strong retracement, ideally to the upper Donchian channel. That would be perfect. I don't know if it's going to do that or not, but more of a pullback than these modest little pullbacks that it's been doing. Although those have been generating pips, I want to put the probabilities more in my favor, and that would occur with a greater pullback than I'm seeing here. Okay, let's see, euro is the weakest, and let's see, the pound is the next strongest currency. So that's going to be my next stop as I drill down the charts, the euro pound. The euro has been on a move to the downside, so I'm not sure if we're going to find any particular entries on these pairs right now, but let's take a look. The euro pound, below the 200 period moving average, took out the upper Donchian channel on the weekly chart, has not taken out the lower Donchian channel yet, though, although it's made an aggressive move over the last several weeks to the downside. Good angle and separation to the downside by slow stochastics as well. On the daily chart, taking out the upper channel, then taking out the lower. So in the daily chart, or on the daily chart, I'm in an open sell scenario. So I'm looking for an entry off a lower time frame, a 4 hour or a 1 hour chart. And on the 4 hour chart, it's just continually taking out that lower channel. On the 1 hour chart, there's been a modest pullback here, and it's been about 20 pips. I mean, big deal. I mean, that's a hiccup. That's really nothing. If I were a very aggressive trader on this pullback, one might consider setting a price alarm to take a look and see what's going on at the market at 0.6985, right in there, setting a price alarm. And what I'd be looking for is the euro going down across the board, is the pound going up across the board. And if that's the case, that might represent an entry. Right now, on the euro pound, the room to move to the next level of strong support is about, not a lot, about 60 some odd pips from where the pair is trading now to the previous low. Okay, the euro is still the weakest, obviously. The Aussie is the next strongest pair. What I like to do is go through the three weakest, match up the three weakest with the three strongest. So next we're going to take a look at the euro Aussie. And this is a pair that on the trending pip count, we've been in for quite a while, about a month or so. And what we're seeing here is price action is not below the 200 period moving average on the weekly chart, but good angle and separation to the downside. Pair has been moving down smartly for quite some time, but we're still, because we took out the upper channel, haven't yet taken out the lower channel. We're still in an open buy situation on this particular chart. However, we go over to the daily chart and we see prices taken out the upper channel, and then came down, took out the lower channel, and has not come back up and touched the upper channel again. So we're in an open sell situation on the daily chart on this euro Aussie pair. Price action here is above the 200 period moving average. We might look at a slight hiccup at that point. A lot of times when the 200 period moving average is touched, price action moves in the direction opposite that it's been moving because it is a very significant level for support in this particular case. That being said, price action could just blow right through it. And on the 4-hour chart, Euro Aussie is below the 200. And we've got, again, on the slow stochastics, we've got below 20, we've got below 20, and we've got below 20. So I'm definitely in a bearish scenario on this Euro Aussie. That being said, it's been bearish for quite some time, several weeks. And what we'd be looking for is more of a pullback because, again, the propensity for a pair that's been in this type of a situation for a long period of time, the propensity, again, is to retrace. Okay, let's see. USD is the strongest. Let's go with the USD Swissy, which is the next weakest currency. And let's see, there it is. This is pretty much going to be a mirror image in reverse, well, mirror image of the Euro USD. And again, strong movement to the upside, angle and separation to the upside on slow stochastics. We've got price action definitely in an open buy scenario on the weekly, open buy on the daily. We've got a modest pullback here, a very modest pullback of 33 pips, nothing big. Again, I like to see a good size pullback before I would enter a trade, and the trade would be entered back in the direction of the trend. Now, a more aggressive way of doing it is, let's say price action trades down to that lower channel. An aggressive way, a non-Donchian channel way, but a valid way of getting into a trade, nonetheless, is when price action touches that channel or the 200 period moving average, because it's really close in this case, kind of dances around there for a while and then starts to move back in the direction of the longer term trends. A trader could jump into that trade at that point with a very tight stop. The problem is that you're calling a bottom. The pair is moving down in an uptrend, and you're saying, okay, it's not going any farther than that, and I place a nice tight stop down there. Maybe it works out. Maybe, however, the pair keeps dropping, in which case you get stopped out. So you got the opportunity to enter the trade earlier in the direction of the trend with a tighter stop, or you can wait for the Donchian channel strategy, which is price action touches the lower channel, then comes back up and takes out the upper channel. That's a higher probability indication that the trade's going to follow through, but you've got a greater amount of risk because your stop is further from your entry. Okay, let's take a look. We've got time real quickly for one more pair here, and that would be the New Zealand USD as we continue on using the strong week analysis as our guide to get into the trade. There's the New Zealand USD. And in this situation, we've got price action below the 200 period moving average. It's taken out and continues to take out the lower channel here. Nice retracement. And here we've got a situation where it touched the upper channel in a downtrend on the weekly, took out the lower channel. That would have been a good entry point. That point, I was out of town, so I didn't get into that particular trade. But what I'd be looking for here is definitely downtrend type of situation, fresh cross to the downside here. And we've got, hasn't come back and touched that upper channel yet, hasn't come back and touched the upper channel. Ideally, what I'd like to see is maybe a retracement to the 200 period moving average before I consider setting a price alarm to check things out and enter the trade, or a retracement to the upper Donchian channel. Okay, we're getting close on our time. I don't want to start another pair here. Not a lot, because a lot of the euro shorts have triggered already. We're waiting for a better entry opportunity. I'd rather, enter into a trading situation late and be right than early and be wrong. So I'm going to wait for a while for the pairs to set up, those euro short positions to set up a little better before I set up another price alarm. This is a situation where you don't always have to be in a trade. Cash is a position. We've said that before. We'll continue to say it. Thanks for attending, and look forward to our next session. Please feel free to email me and follow me on Twitter. Thanks. Have a good evening.